G'day guys, welcome back. In this video, we are going to talk about Washington Saul Pattinson. It is well known for its abbreviation WHSP, but the ASX ticker code is SOL. But I'm gonna refer to it as Saul Pat from now on. We're gonna talk about its performance based on June 2020 annual report and look deeper into its balance sheet and statement of income, because amazingly, in June 2020, in the COVID pandemic situation, they achieved the highest return on equity over the past 20 years, close to 30%. As always, in this channel, I'm gonna talk about some of the risks with this company. Without further ado, let's get into it. So WHP, if you see the main website, they mentioned that with origin in owning and operating Australian pharmacies, so they started with pharmaceutical industry. Saul Pat has expanded beyond pharmacy and today has a much broader investment portfolio encompassing investment in natural resources, mining names. So this company will be exposed to the commodity cycle, building materials, exposed to the property cycle, telecommunication, retail, agriculture, property, equity, investment, and corporate advisory. So it is ultimately becoming a conglomerate in some sense. Let's have a look at the price chart over 22 years. The graph looks amazing. One of the things that I have to take my hats off for the Saul Pat is that how they are resilient and has no effect at all on the GFC. If you see this period here from 2008 to 2011, they have no effect at all. So a lot of shareholders who invest in Saul Pat for the past 20 years has done really well. You can see from the 22 years CAGR of 11.5%, 10 years CAGR of 9%, 5-year CAGR of 13%, and on top of that they give about 1 to 3% dividend yield, fully franked, and it's increasing over 20 years. What more do you want? But if you are a bit unlucky and invest in the time around 2018, 2019 in this spike here, then you might lose some money. Let's compare Saul Pat with AFIC and Argo and also MFG, Magellan Financial Group. Saul Pat is on the blue line. It is second after MFG, possibly because Magellan has done about 40% return on equity the past 5 years. And definitely Saul Pat, in terms of share price, the past 5 years has done a lot better than AFIC and Argo. And as you know, they own the following companies such as Brickworks, Milton Corp, which they are talking about the merger at the moment, and also the BKI investment. And Saul Pat, with the blue line, is superior for over the past 5 years compared to its subsidiaries. So as you can see here, Saul Pat is one of the ASX company that has delivered the increasing and fully franked dividends the past 20 years. In 2020, dividend was 60 cents per share, and back in 2019 it was 58 cents per share, and that's definitely about 3.4% increase. So well done for that. So if you can see here from the return on equity chart, they have done close to 30% in June 2020, and that raised a question: how do they increase the return on equity to that level in just a matter of just 1 year? In June 2020, in the event of COVID pandemic panic, I mean, we're still in the global pandemic right now, but yet Saul Pat has delivered. But I have a feeling that they might have sold some asset that they own, which we will talk about further on the next slide. So this is the statement of financial position, and based on June 2020 report, Saul Pat has a total asset about 4.1 billion, a net asset of 3.1 billion. That means they have a total liability of 1.1 billion. This is the part that Milton shareholders need to be aware of, that they have incurred a lot of debt, possibly because debt is really cheap and the interest rate is so low at the moment. It's definitely an increase from total liability in 2019 was 159,000 to 1.05 billion in total liabilities. And we will talk about how do they allocate some of this debt as well on the later slide. But this brings the liability to asset ratio about 25.4%. But the increase of total liability is quite significant. It's 7 times to its previous year. So this page here also sums up the investment. You can see on the long-term equity investment here, they have TPG, which is valued at $1.8 billion. And also Milton Corporation, BKI, Clover Corporation, CBA, Woolworths, Macquarie Group, Pengana, West Farmers, Magellan Financial Group, Bailador Technology. And this is also listed, controlled, and associate entities that Solpat has, such as Brickworks, New Hope, the coal mining company, Australian Pharmaceutical Industries, Apex Healthcare, Berhad, there's a Malaysian-based company, Tuas Limited, another telecommunication company, and Pengana Capital Group, and Palab Pharma Limited, with a market value of about $2 billion. And this long-term equity investment generate dividend distribution income. And you can see straight away TPG Telecom with 1.8 billion worth of the investment generate a lot of dividend of $132 million. That is the largest after other listed entities. And next in line is BKI. That is interesting that BKI delivers higher dividend than Milton Corporation, even with the 91 million position in BKI and 93 position in Milton Corporation. What does that mean to the Solpat Milton merger? It could potentially increase the dividend income from Milton Corporation if Solpat acquire a lot more position in Milton Corp. But guys, please remember that TPG Telecom contribute almost half of their net profit from their dividends alone. And also, if you add up the dividend income from the listed, controlled, and associated entities, Brickworks has delivered 38 million. New Hope has delivered 62 million. Oh, that is interesting. I was a bit doubtful that the coal mining would do well in 2020, but yeah, that's what they report, 62 million. That's interesting that the Malaysian investment is not generating a lot of dividend with only 1.7 million, although Solpat owned 30% of the company. So the total dividend and distribution income is 280, and like I said, half of it comes from TPG Telecom. And they also have interest income, so possibly they have about 50 million invested as loans or fixed income in term deposits, and that generate about 10 million. Wow, that's higher than a Milton Corp dividend. Okay, it's followed by the other expense and the finance costs. If we add up the other expenses and the finance costs, that comes about 19.5 million, and that's about given with a net asset of 3.1 billion, that's about 0.62% of net asset of the total expense. So the operation overall is 3 times more expensive than AFIC and Argo. But aside from that, with the net profit of $275 million and the dividends paid only cost them $143 million, it's about 52% payout. And maybe they can use the rest 130 million for something else. So this is the associated entities of Solpat Group. We already talked about TPG Telecom, where I believe previously Solpat owns about 25%. Now it's down to about 12.6%. And also they own, Solpat owns Brickworks, about 44%, followed by New Hope, which they own 50%. And the Round Oak Minerals, the mining companies, Solpat owns 100% of it, and they also involved in other investing activities such as loans, properties, private equities, and other financial assets. This is where it gets interesting because this part here will explain the 30% return on equity for June 2020. It says TPG is a telecommunication and internet provider As at 31st of July 2020, the parent entity had 12.6%, previously 25.3%. See, I knew it. They must have sold something to ramp up the return on equity. During the financial year, the group's share of ownership in TPG was diluted from 25% to 12.6% as a result of the TPG and Vodafone Australia merger. As of the merger date, June 2020, the group lost significant influence over TPG and discontinued equity accounting for its investment in TPG. So that means they must have paid a big amount of capital gain tax too. A little bit more about Brickworks. Brickworks has 4 divisions: manufacturer of building products in Australia, manufacturer of building products in North America, property ownership and development, and investment in Washington Saul Pattinson Company Limited. Okay, so through Brickworks, you are exposed to US economy risk. And next, we got New Hope. New Hope engaged in coal, oil, and gas activities, which will worry some of the investor who is focusing on sustainability and environment. Next, we have Round Oak Minerals, where Round Oak engages in zinc, copper, and gold mining activities, which include exploration, mining, and processing of ore into zinc and copper concentrate, copper sulfide, and gold. Okay, so Round Oak Minerals, every time I see mining companies, there are hundreds. There are a lot of mining companies in ASX, and it's pretty hard to pick the winner because it's very capital intensive. And once you even do the exploration, there's no guarantee that you will get the return that you are seeking for. But let's have a look at further the revenue based on the segment. So we have the first row here, the TPG, followed by Brickworks, New Hope, and Round Oak. And we already talked about Round Oak, and let's have a look at the June 2020 report that it is reported a loss, ladies and gentlemen, of $94 million. And also the coal mining operation reported a loss of $78 million. And that is huge because when you see New Hope and Round Oak is owned by Saltpad by 100%, and New Hope is owned by Saltpad by 50%. The rest, they are public company. You can even purchase the New Hope shares under the ticker code NHC, but they reported a loss. And Brickworks, it's definitely has slowed down a lot. Property market definitely has slowed down a lot, especially in the US. That's why the revenue is so small of 19 million. But look at this. The TPG Telecom has profit of $1.5 billion. $1.5 billion through the dilution from 25 to 12% of shares Saltpad has owned. And as I said before, it will incur capital gain tax about 30%. And voila, they have to pay $389 million. So I'm not surprised that Josh Frydenberg loves Washington Saltpad, because they just pay a lot of tax. But the TPG sale has generated a profit of 1.1 billion. But if we scroll back to this section here, they have remember that they mentioned that TPG generate about 132 million. I suspect after the sale it will be half to about 65 to 70 million dollars a year of dividend income from TPG. So I believe that this merger, they need to really be careful of the next 2-3 years, because if they're not careful with the cash that they have, it's pretty hard to get the dividend income that TPG has delivered. I mean, for 1.8 billion worth of shares, that's close to about 5-7% of dividend yield. Let's have a look at the July 2019 and especially pay attention to Round Oak. Well, as I said before, mining industry is not an easy business, and you can see in 2019 they also incur a loss of 73 million. So definitely Round Oak is a burden to the company. Has reported a loss for 2 consecutive years. New Hope has done a lot better. In June 2019, it has reported profit of $105 million, and also Breakworks has done a lot better too. And this is a Solpat explanation with what's happened with the New Hope Corporation. They mentioned about the US thermal coal price, lower production as at its Queensland mines, partly offset by a full year contribution from its 80% interest in Bengala joint venture and lower Australian USD exchange rate, which then incur negative 92 million. And TPG Telecom contribution lower due to net margin reduction from the migration to the NBN, and Solpat not taking up a share of TPG income from June 2020 due to merger of TPG and Vodafone. Okay. Brickworks experienced a fall in demand in its building product businesses due to COVID-19. Okay. And Round Oak Minerals saw increased revenue from its Barbara and Mount Colin mines entering production, offset by lower commodity price and high ore treatment charges. So for any Milton Corporation shareholders, I hope they're aware that once you're part of Solpat, Round Oak Minerals will become a burden. Aside from that, investing in Solpat involve a risk in terms of commodity price, oil, coal and gas through New Hope, and also the copper, gold and zinc through Round Oak. And also, not only that, New Hope supplies coal to mainly Japan and China as well, which will be interesting what's going to happen next year, since there is a tension between Australia and China. And definitely, if there is a decrease in coal demand, that will affect the price and so on. With this, I think mostly Asian and one Chile, one South American country. And interestingly, Round Oak supplies to Switzerland. Oh yeah, and I mentioned before that they have term deposit 51 million. Wow, and it generates 10 million. Wow. That doesn't sound right, but I think they also invest in loans as well. So, but I hope they utilize better investment with this low interest rate environment. Okay, so next is that we mentioned about the debt position of Solpat is the highest ever for the past 20 years. And this is detail of the current liabilities, and you can see the current liabilities about 259 million. The one that we need to pay attention to is the total interest bearing liabilities is about $834 million. And that is a lot of debt, which I hope they utilize those debt into a good use after the TPG sale that kind of saved them from reporting a loss in June 2020. And here we go, guys. You can pause it and read further. I'm just gonna highlight some of the summary of their explanation of the loans they got. The parent entity utilized 190 million of the 250 million equity finance facility with NAB. The debt incurs interest at the variable rate. Variable rate. As long as the rate is low, everyone's happy. But if the rate skyrocketed, then there's a risk as well. And the term debt of the Solpat Agricultural Holding Trust of 20 million. All right, so definitely when Rob Milner talking about they're buying farms, they're using about 21 million in debt. Oh, here we go. This is more details about New Hope. You can pause this video and read. This is from June 2020 annual report. I'm just gonna highlight some of the summaries here. New Hope secured loan facility is with a syndicate of Australian and international banks. Wow, that sounds fancy. Syndicate. The facility comprised of a 600 million drawable amortizing facility and 300 million credit support facility. During the current financial year, 135 million of debt drawn down on the facility by New Hope was repaid. Wow, it must cost a lot to run this coal mining company, that they have to get a debt to keep the operation running. But that's something to think about as well. about Salt Pattinson that New Hope and Round Oak is a burden right now because of the slowing down of the economy and also the commodity price that will affect these two business greatly. Okay, to sum it up, guys, sale of TPG stake, a dilution from 25 to 12%. Oh, there's a typo there. That's not July 2021. That's July 2020. Anyway, what I'm saying is the 30% return on equity should not be mistaken as the regular earnings. You shouldn't see that, wow, they have done 30%. Oh, next year they're going to do 30% return on equity again. They're going to have $3 earning per share again. No. It's not going to happen again next year. I mean, it's just once in a while phenomena where they sell assets and generate 1 billion profit after tax. And that's how they increase their earning per share in June 2020. Without the TPG sale, Solpat will have reported a loss of about 170 million due to Brickworks and New Hope, and also Round Oak is not doing so well. And interestingly, it coincides with the merger that is happening with Milton. I don't know, what is this merger gonna help them to get into more debt so that they can get into more international equities, which in turn will increase their return to maybe somewhere in the Magellan Financial Group level, about 40% a year. Because so far, Solpat for the past 20 years has done great. They have done about 10 to 13% return every year. That is amazing. They haven't done negative even in the great financial crisis. But in June 2020 I believe is one of the most difficult times for them. In my opinion, Milton Corporation management are heavily overpaid and overindulged with bank loan facilities in the magnitude of millions that they don't even need. I mean, for mediocre, just 3 to 5% return on equity, getting paid that much, I don't think they deserve it. Let's not talk about BKI with the questionable moves as well in June 2020 report. In my opinion, Solpat is not bad for accumulation phase investor. The other thing that I want to mention is that the debt position that has been the highest ever for the past 20 years. It can be good, but it can also be bad. It can be good if they make use of those debt, acquiring really good value business, bringing them really high dividend yield through this COVID pandemic. A lot of some shares are in discount, but if they make a mistake and somehow the risk is that the interest rate is not fixed, it is based on market, it could change anytime, and if they cannot pay or the finance costs, the repayment of the interest becomes too high, the shareholders will be hurt by, they have to face that the dividend yield will be lower in that particular year. We already talked about the Solpat Milton merger, and the other thing to mention as well, the Solpat has global economic risks through their investment in Brickworks. They also have a US market division, and also New Hope, who has Chile consumer, even China, and also mainly Japan as the coal consumer. And also thermal coal price will affect the Solpat income as well. One of the thing that is the most worrying for me is that the Round Oak, how the past 2 years they have reported a loss consistently of about in the magnitude of 70 to 90 million, and Round Oak is owned by Solpat by 100%. And that's my opinion, guys, with Washington Salt Pattinson. Let me know what you think, and thank you so much for watching. I'll see you in the next video.